Good morning, gang. Good morning. Welcome back to this week's Bitcoin update. First and foremost, remember, nothing discussed today is financial advice. It's just for educational purposes only, yada, yada, yada. And now that's out of the way, let's jump into the charts and get some zero bullshit technical analysis, which is what you guys come for. No moon boy, no doom boy. Just let's trade the charts. Right, so following on from last week's video, we've had a bullish pump to the upside. In fact, last week's video would have been the last red candle that we had, well, excluding yesterday. And obviously we've had a parabolic move up to the upside, okay? So as I was saying last week, in fact, I've been saying it for the past few months, we were in a macro sticky zone right here. Wasn't the time to get FOMO. From a risk to reward point of view, it wasn't the time to long. It was the time to wait for the market to show its hand and see where we go from there. Okay, and in the end, the market did show its hand because all we did was we just kept creating higher highs and higher lows and higher highs and higher lows. We didn't break any trend. Okay, so anyone that's been, desperately trying to short this down, unless you've got a really good scalping system where you know when to get out of the market on a short, shorts weren't your friend. Okay, longs are in place. So I know there's a lot of people in the market out there that that they've missed this entire move up, and then potentially they've missed this part of the move up, and they're just angry, so therefore they're revenge trading. And what you'll soon realize is, it's just a quick way to destroy your account. Okay, you've got to trade what the market gives you. Okay, we're not trying to predict where the market is going. We're not trying to forecast its every single high and low everywhere. All we're doing is we're letting the market show its hand, and then we're getting involved. Okay, that's how you trade. That's how you become successful in this game. Okay, you mark out the areas where it's statistically the most likely place where it's going to cause a reaction or slow price down, and then you see if you are given a setup, and you can trade both sides of the market. But just don't forget, when you've got a really strong bullish trend like this, shorts are against you. Shorts are against the trend, so you have to be prepared to lock in a quick take profit one and then step aside and ensure that you're hedged, ensure that you've got longs open. Okay, I don't mean just FOMO long and long in random zones like chasing a candle. Make sure you've got good confluence for longs. Okay, so I'm not going to run through trades that we've taken in the group because effectively it's been pretty much sitting in longs most of the time. I have just taken profit on a short this morning, just trading the local range. In fact, you can see this. I zoom into the 15-minute chart, and there you go. There's the short that I've taken profits on this morning, and obviously since then we're getting a nice bounce. And effectively, as I told the guys this morning, we just have a local range. Okay, so we've got range highs, deviation, and then range lows. And then we've had another deviation, okay? So that's all we've had. And again, from a short perspective, that was the only short to be had realistically. Longs are still in favour because the trend is still up. I didn't want to delete that. I'll get rid of that and then get rid of that. There we go. Right, okay, so what's next? Okay, well, as I've said on Twitter publicly, and I've been saying on YouTube, if we break this sticky zone, then we've got a chance to come up to our next sticky zone. Okay, now next sticky zone, again, it's the same region we've been sharing. There's a couple of ways to get to this sticky zone. So first and foremost, a fib from the overall high to the overall low. Quite simply, draw this on. And then we'll change this over to our 786 fib. And what can we see here? We've got the golden pocket. Okay, so in my opinion, every man and his dog is looking at this golden pocket. Okay, if you go through the history of Bitcoin, macro golden pockets tend to be a zone of interest. Okay, so every man and his dog's looking at this, but for me, there's several reasons around here, and it's a bit of a wide zone. Is this okay? It's a bit of a wide zone for the next sticky zone, and the reason why it's a bit of a wide zone is if we draw on a range, so effectively we are back in the top range. Okay, we're back in the top range. So within this top range, what we're coming up to next is we're coming up to the next major resistance. Okay, so it's going to be the EQ, it's going to be the golden pocket, and then if we throw it on a volume profile for the whole of the top range, we can also see we've got the macro point of control. Now this macro point of control is on Bybit on the inverse pair. Other point of controls are in different locations. I am fully aware of that, but I'm trading the Bybit chart because I do trade on Bybit. Okay, so this is the next major sticky zone. So we've got what we call confluence there. Okay, so we've got overlap in technical analysis, which shows that this will likely be a sticky zone. Now, the only thing that makes me cautious is all the eyes are on this level. Okay, so we've got to be aware. But where we are right now, we're not in a high confluence zone. So yes, it is taking a breather in this small range, as we've just seen there when we zoomed in. Price is taking a breather, but the stronger resistance is above us. Okay, so the stronger resistance realistically is anywhere from 46, give or take, up to around 50k. Okay, so that's the next major resistance zone. So within this, all we're looking for is what happens within this zone. And that's, again, if we even get up to that zone. Could we roll over here? Yes, we could. We could roll over. Again, nobody knows what's going to happen. We're just playing the probabilities. Okay, so this is the next major sticky zone to be aware of. So if and when we come up into this sticky zone, okay, I will not be FOMO longing. I will be taking more profits on longs from lower. And I will potentially, if given the setup, be looking for reasons to hedge my longs and looking to short the market. Okay, so this is now the next major of resistance above. Now below us, and again, anyone that's watched my content for a long time will know what I think about thin moves like this. Okay, it's created no structural support. So within this, there's no real high time frame structural support. The next major structural support realistically, and it's not the strongest, but would be coming back down into this zone down here. Okay, so back into this old range. So whether you want to call it a triangle, whether you want to call it a range, I don't really give a shit what you want to call it. All I know is this is the next sticky zone to the downside. Okay, so that is realistically your most local, strongest support region, shall we say. Okay, so if price does roll over here, starts coming down, then you've got to ask yourself questions at this point. Do we get a simple breakout and retest for a reversal? It's possible. It's possible. It's one setup that we can look for. But once again, it's not just a case of leaving limit orders down here and hoping for the best. It's watching price come down and seeing if you get a strong reaction. If you get a strong reaction, a local market structure change to the upside, you start to see bulls stepping in, you start to see aggressive market buys, then yeah, there's a potential for a long opportunity. If you don't see any of that and you don't see the setup criteria that you need, then there's no long trade. And in that case, you'd just be looking to get acceptance back into here, and then effectively back to trade in this range. And eventually, this range will either break that way or it'll break that way. And you just play it level to level, okay? But locally, that is your strongest support zone at the moment, okay? So that's what I'll be looking at. If it starts going lower than that, then realistically, you've then got to pray that the overall macro range holds, okay? Because if that doesn't hold, then we are going to be going lower. Okay, so that's it. It's fairly simple where we are on a high time frame. Okay, low time frame, there's other trades to be had, but I'm not going to run through that because that's for the members. But high time frame, effectively, that's what you're looking at. Now, obviously, if you do want access to daily trading plans and all of the educational content that we have, then first and foremost, head over to our website, okay, spitfiretraders.com. Traders Discord here, so that's the link to the free Discord. And obviously, if you do want access to over 60 modules now of educational content, teaching you basically how to trade exactly like me and the rest of the members, then head over to the joiners tab, and there you go. The price is $59.95 Great British pounds, or in dollars, that's about $75. And within that, you will get access to everything. So all the educational content, all the templates, all the cheat sheets, our daily trading plans. In fact, that's this morning's daily trading plan, so the guys know exactly what I'm looking at this morning. And obviously all the content that we have here. Okay, and next Tuesday we'll be adding another module to said content. Okay, so if you've learned something today, smash that like button. If you're not subscribed, consider subscribing, and don't forget to hit that bell notification, because once again, it's pointless watching these videos back in a week's time once price action's played out. And until next time, gang, as you were, bye bye.